Hello and welcome to Landy's Crypto Corner. Today is March 8th, 2023, and it looks like Bitcoin has chosen its direction here. Let's go ahead and jump right into this. Bitcoin is living below the 200 EMA here on the daily, as you can see, and pushing up against, well, it's already kind of pushed up against the lower second standard deviation Bollinger Band down here, and could go for another swipe at that downside there as well. So the last we spoke, we were just kind of going sideways in a kind of a line chart, especially on lower term timeframes in the previous recorded video for you guys. And right now, or at the time, I should say, we know where we are right now, but at the time I said, it's going to remain to be seen which direction Bitcoin chooses. Well, it did choose the downside direction here below the 200 EMA and has come down and started to flirt with price action on the highs over here from the first drive up into this overall top area here. And looks as though, there is the possibility for things to continue to the downside. And, even I would say, to be quite honest, the third standard deviation is in play now. And that is down here at the lows, coming in at 20,450, as you can see over here on the price scale to the right there. So what I'm going to show you over the next couple of minutes here are some possibilities of further downside, and then the possible scenarios where things could pop up back above the 200 EMA and what that might mean, what some of the targets might be. So when looking at the potential for further downside, we can see that we are starting to get that re-expansion to the downside on Bollinger Band with percentile here, BBWP, but we are not seeing it supported by the moving average just yet. And, so that's really indicative of price trading below the lower first standard deviation to the downside here. Of course, breaking below the daily 200 EMA is not a positive thing for those in the long position. So, but until things start closing below that second standard deviation there at 21,387, then we're not really going to see aggressive expansion to the downside. And I would be mindful that things, if they do get aggressive in lower term time frames from the daily perspective, you're not going to see too much initially on like, let's say, a daily move below that third standard deviation to the downside here. Maybe more would come later as that third standard deviation and second standard deviation turn down more aggressively. BBWP starts to turn up more aggressively, but realistically, that's usually when you see spikes up into and around that third standard deviation. Usually, unlike moves like this where we were in compression for quite a long time going sideways down here on the lows, and then really squeeze those Bollinger Bands together, volatility hit the floor. Then you'll see, closures like what we saw back here where, in early January, we had closures above the second standard deviation with wicks thrown above the third standard deviation. We got 1, 2, 3, 4, 5 closures above that third standard deviation. That is very, very rare. And you don't see moves like that coming off of a more expanded width of the Bollinger Bands. So, for instance, this move from the second standard deviation area above that first standard deviation to the upper bands here, down to the lower bands, usually is a range play. We're not seeing prolonged compression of price. We're seeing price trend to the bottom side of those Bollinger Bands. So this could potentially signal a short-term reversal on the daily being down in these areas around the second and third standard deviations here. Now, that being said, from a support and resistance standpoint, closing below this low now, there's a lot of overhead resistance where the people in the short side of the trade have the protection of the lows now, of the actual low over here, and the lows of the highs up top here. We also have a higher low in this mix along with a lower high. So we should be mindful that if Bitcoin does pop back up, it could fail to run any higher, that thus be getting even lower prices. So I wouldn't say if Bitcoin pops back up that it's party on to the upside until we see very specific things that we're going to go through here in just a moment. But from the momentum perspective, we can see that BBWP is ever so slightly picking up in terms of its percentage width. So we do see continued expansion of the Bollinger Bands to the downside below that first standard deviation. And Stochh is supporting that momentum to the downside here. Now, the Stochh momentum pivot is going to be listed here on this indicator, the KVDB Stochh, and it's going to be 21,852. So if we do see a daily closure above there, that would shift the momentum. Now, of course, you don't need a Stochh that tells you the actual momentum pivot. All you need to do is say, okay, well, if Bitcoin were to put in a low here, that will turn Stochh back up, at least on an initial cross of the K over the D read. Now, that is running a 6.3 length for the Stochh settings there. Now, in this case, if things did close back above, I would be a little bit more aggressive with that upside number. I would need to see if we were to close this particular daily candle that we're currently trading in back above the open of yesterday's candle, I would declare that a low and start looking for higher prices. Now we can see where the first standard lower Bollinger Band is here, and that's coming in at 22,320. So anything above 22.3 would then be coming back up and testing these areas to the upside around that $23,000, just shy of that first standard, or the basis here above the first standard deviation, to around on the lower end of that 22.5 to 22,650 or so, which if we do see prices trade above this area here, which would be this high from the 5th of March at 22,654, then we can start looking towards around 23 to 23,250 there by the basis of the band there, the 20 simple moving average. So that's kind of the upside look. And then, of course, any closures below around 21.4 here, the second standard deviation to the downside. In this case, it's coming in here on Coinbase at 21,384. And I would then be looking for spikes down to around that lower third standard deviation, around the mid $20,000 region, which is coming right in line with this low over here. So let's go ahead and take a look at some lower term timeframes to see how likely that might be. As we do see at the moment, we see that we're just kind of getting a rollover here on the 12-hour towards the 12-hour 200 EMA, which just so happens to be right around that second standard deviation to the downside. You'll see that that's coming in at around 21,400, that second standard deviation. The 200 EMA for the 12 hours coming in at 21,293, so just about 21.3. So between 21.3 and 21.4, which, funny enough, from the daily perspective, 21,383 and 21.4, basically same area. So close below there on the daily, close below there on the 12-hour. That's going to get a move down to, in this case, we're looking at the third standard deviation to the downside, which you see is more of a wick catcher than not, unless we're coming off, like I showed before, very, very, very contracted price action or very low volatility of the Bollinger Bands. And in this case, we're looking around 20,000 and a half and up. And in this case, the third standard deviation to the downside is coming in at 20,776. See that the first standard deviation to the upside here coming in at around that $22,000 here. So $22,000 lower first, regain that. That would set in a low on the 12-hour with targets up to around the basis, which is around that 22,600 area. In this case, 22 devil's number, 666. So what I would say is, when we look at that, we can see that would, prices close above there on the 12-hour. That would get things above the lower first standard deviation on the 1 day. So you can see how the 12-hour and the daily kind of fit together there. So below the 200, going to run to probably 20,000 and a half. We kind of evaluate things, see if that's a deviation, a swing fail of this low structure over here or not. Now, when looking at the 12-hour Stochs, it's pretty deep down there. It is oversold at the moment. That doesn't mean much, as things can stay oversold for quite a long time. And the momentum pivot here is a little bit more aggressive than the daily there at 21,975 to turn that back to the upside on the 12-hour. The 8-hour, you can see that we're just in a trend to the downside here, and we are living below the 200 EMA on the 8-hour. So that would need to be regained to start even thinking about a low, and that's sitting at 21,710 in this case. So these numbers coming up a lot of similar numbers. The second standard deviation to the downside, 21,644. We start seeing closures below there again, targeting the third standard deviation there, coming in at 21,300. So Bollinger Bands are expanding to the downside right now. So while we're getting expansion, we can see the momentum is pointed down. We have lower high, lower low structure. We are below the 200 EMA. So we're seeing that, for the moment, at least from the 8-hour chart, we are looking for further downside. The momentum pivot for this is going to be 21,856. The 6-hour, where we got some very nice compression on the 6-hour here, while price was trading and kind of going sideways above the 200. When it lost it, expansion to the downside, trending outside of that third standard deviation, now opening back in as the Bollinger Band BBWP starts to increase. Bollinger Bands begin to expand. Now, again, we're coming into areas of support down here. There is some horizontal supports here. We've got 21.5, 21,500 area. This is an area that I called out a while ago in previous videos. And, that's kind of this is the bouncy area when looking at some of these areas. $22,000 to turn that back up on the momentum pivot. Of course, back above $22,000, a low would be established here. So $22,000 being the first standard deviation, also being the open of this candle that just traded below the lows and on a closing basis. So the prior low coming in at that $22,000. This is your breaker bar candle. So trading back above there, of course, would trap bears and be more bullish than not, but still need to get above that 200 EMA and above all of the overhead resistance now. In this case, the 6-hour, that's at 22 on the momentum. The 4-hour is going to be down there as well. Still got some room though. 21,789 on the 4-hour here. Has already been living below the 200 EMA since back here on around the 25th of February was the last tap on it. We tried to regain it. We dumped off on the 2nd of March below the 200 EMA, and the 200 EMA is coming in at where the upside expansion is right now for the Bollinger Bands, which would tell me that if we do get a quick move back to the 200, it's more than likely going to get rejected. At least on first pass, we need to see, of course, higher low structure build, either off of the lows initially to go and retest that. So what you really want to see is some sort of a higher low or a consolidation that then recontracts the Bollinger Bands and tries to expand past the 200 EMA. Excuse me while I adjust my chair here. And that would be indicative of, popping up above the EMA, 200 EMA in this case, and trying to reverse this particular strong downtrend. But this move is kind of just getting started on this 4-hour. So unless it's just going to be a deviation on the longer term time frames, like the daily, swing below the 200 EMA and then pop right back up. Unless that's going to be the scenario that we see play out, I suspect that we're going to see some further downside here. We are in and around, of course, the same support areas as on the other charts, around that 21.5. So hitting that area and fulfilling some of that is not unexpected at all. In fact, the low came in at 21,580 And I'd have to go back and reference some of the previous videos charts, but I believe I called around this area as being the next stop below around the $23,000, and of course bounces along the way until we get about 21.5. Next area, of course, is going to be that 20,500 or so, and that area needs to hold, or Bitcoin's going to experience some really nasty downside. So the 4-hour structure, just pure downtrend. We're getting pretty aggressive expansion right now, but it's not so aggressive right now that that it's just a complete liquidation meltdown. This is a structured drawdown and riding that for lower first standard deviation to the downside as kind of the resistance overhead, and then closing below the second standard deviation, while either getting a closure or two, especially at the beginning of the expansion. Of course, you're going to see closures below that third standard deviation. It's kind of your break to the downside here. If things break to the upside, you wait for the next candle, see if it gets continuation. It did not, broke to the downside, tried to regain, and then just kind of rejected continuously below that basis band and first standard deviation. So typically you get fake outs to the upside, the downside, and then moves begin. In this case, the fake out to the downside was this a candle on lower term time frames, because it wasn't a fake out after all. Got bought up nicely. A lot of folks went long and then got dumped down on the way down here. So yep. We're at the main area that I want to see try to hold up, where these highs intersect with these lows. We are there now. And if that area doesn't hold up, then you are definitely going to see price trade down towards that 20,500. When looking at really low term time frames like the hourly here, we see that we're getting continued expansion on all of these lower term time frames, and expansion is just beginning on some of the higher term time frames. The hourly is even pointed down here below about 21,930. So overall, what is that telling me? Based on all of the things that we just looked at, saying that below $22,000, not much is happening for the upside. So most likely we'll continue trend down towards that 20,500 or so, and then possibly below $20,000. If we do see anything trade below this last wick low, we can turn on some horizontals here. Anything below this last wick low over here, or this wick low over here at 21,366, 21,400 area, where the second standard deviation coming in right there at that wick low area. So this area is support. If we do lose this, then you can see next area is coming right in at that third standard deviation to the downside. If we do close below there, that's when things get pretty nasty, and I suspect violent, down towards these lows here at around 18 to 18,500. So we've got a couple areas that intersect. We have this area here at 18,500, 18,400 to 500 area, and then we've got the highs there, and I do think that it would be a trip down there to retest, and then that opens up the possibility of retesting this major low structure and possibly lower as well over time. And when looking at this, we have a 2-day closure coming in with today's daily closure, and that is also going to start supporting the idea that we could see further downside. Now, we're not going to know until today's close, but continued closures below 23,380 or so on momentum, of course, going to spell further downside. But more importantly is going to be if we do see any closure below 21,250. Any closure below 21,250 is going to get more aggressive expansion to the downside here, which we're seeing kind of just gentle floating around of expansion or Bollinger Bands just going sideways, which typically begets a large range or a large trading range. But what this would do is start to expand that trading range further to the downside. And in this case, we can see that those targets are lining up very well with support and resistance on the lower second and third standard deviations to the downside here. Now, conversely, back to the upside here on the other side of this trade, back above $22,000, 22,300 or so. I'm going to give it a range because of where the daily and 12-hour Bollinger Bands are sitting with their first standard deviation to the downside here. Back above that lower first standard does give me the bias that we're going to go test back up further around those 23,000 to 23,500 pivots. So, and really anything living below about $24,000 right now for price closes, gonna probably get more downside here on Bitcoin, but we got to see what happens over time here. We have a 3-day, 5-day not coming up yet. And then, of course, the weekly, obviously, we are midweek right now as I record this. So what's going to be a little more interesting is to take a look at CME futures here. So we can see that we're trading right at the low, below the first standard deviation to the downside here. And if you look here, you can see that we have the third standard deviation to the downside here on the daily coming right in there, currently at gap fill. So now what I would say is we're probably going to see this float on down. I don't know how aggressive it's going to get, but anything below $21,000 would get more aggressive downside expansion of the Bollinger Bands here, as it's just kind of giving off the range look. Or a rangy type look, like buy support, sell resistance is kind of what it looks like currently. So, and if we did see a very quick spike down to around that 20,000, in this case 20,000 or so is going to be the gap fill there at 19,995. If we saw a quick spike down there, I suspect it's going to be a good opportunity, at least on lower term time frames for the long side. Now, of course, you're going to have to make your own assessment at that time and make sure that you are on the right side of the trade, as I'm not a financial advisor. That's just what I'm going to be looking for, is if we do see any kind of really fast intraday move down to something that would be a gap fill on CME, probably looking at that thing getting bought up pretty quickly. So, and of course, right now, living above the lower supports for the moment here at 21,380, trading around the mid $21,000. Obviously, we'll do that. And then 20,400 kind of coming into alignment down here, kind of bracketing this bottom side third standard deviation. Now, close over close. CME closes down here again below the first standard deviation to the downside, rather, which again coming in at $22,000 right now. I would say you want to be above resistance in most cases. So that 22,300 is going to be a more conservative call, but above $22,000, you will not see continued pressure from the Bollinger Band expansion to the downside. So the third standard deviation, second standard deviations would, kind of stick around the areas and price points that they are currently at. And thus beget, if things did hold supports, thus beget another try back up to around where the 200 EMA is. Now, the 200 EMA here on CME is quite a bit higher than that spot price action 200 EMA, sitting there at 23,545. So back above 23,550. I think this, from the CME perspective, would give a nice try to that upper first standard deviation there at 24,140. Above there, we're looking at the highs again. But as it stands right now, things look like they're just in a more of a range trade setup, at least for now. And the 2-day kind of supports this as well, at least for the moment. The 2-day is contracting on the Bollinger Bands pretty aggressively here as well. So we are seeing nearly a 2-day tap on the lower first standard deviation there at 21,485. So around that, what was the low here? The low came in at 21,600. So, we're in the general vicinity of that 21.5 support. And, that's not to be unexpected here from the way that the Bollinger Bands look on the 2-day. When looking at expansion, though, we are starting to see things expand to the downside. Now, you're not going to see aggressive expansion to the downside till you see a closure below the lower first standard deviation, which would be at closures below that 21,485, down to that lower second standard deviation there at 22,000. And you can see that $19,000 is where the lower third standard deviation is. Now, from the look on the CME Bollinger Bands, what I'll tell you from my experience is that if we saw prices trade around there, they're probably going to bounce pretty aggressively intraday off of those areas. So again, that kind of lines up with the support and resistance that we're seeing on the daily anyway. Now, the 2-day is going to close with today's daily candle on both CME and spot price action. So be on the lookout for some of that. I believe CME's got a few other closures here, or did have a few opens. Let's go ahead and take a look real quick here. So the 3-day did just open with today's daily, and yep, the 9th, and I believe the 5-day as well just opened. Yes. So we'll go ahead and kind of glance at those charts real quick here. The basis band on the 3-day coming in at 20,885. That's a natural magnet for price action. Again, so close to the gap fill. I wouldn't be surprised if we saw that gap get filled there on the 3-day. You know, back above 23,785 and things probably going to run the highs again. From the 3-day perspective, it would have to close up there on the 3-day perspective. We might have already, like, for instance, inside of a 3-day candle, you could see price action that runs the highs or runs the lows and then turns into a wick. For sustained 3-day moves to the upside, need to see it close back above that first standard deviation or upper first standard deviation as it is labeled here. We see that the 200 is up above the upper second standard deviation. If we did see a closure from the 3-day here below 20,885, the next major target's going to come in where? Go figure. It's coming in right around this high on a closing basis here. So we'll say that's right around the open, the close open here on the 3-day, coming right in at that lower first standard deviation, which not a great number if you're bullish. Down there at 17,875. So that would be that move. Well, that'd be a very aggressive move back down lower. And still, that would open up the possibility that price could get ran lower, could run lower. Now, in this case, what you must remember about this number, because it is a bit different than what you're going to see on spot price, CME is trading at a premium right now over spot price action. I believe it still is. So, well, it's ever so slight, but it is delayed. When Bitcoin was in this really aggressive downtrend, though, and before this trend reversal on the higher low on the 3-day chart here, for instance, CME was trading at almost a $500 discount. So 17,875 is really around the lower $18,000 area for spot price action, and where spot price was closing at the time. So when looking at this, it looks like, hey, it's back below $18,000 because it was at that point trading at a discount. Now, until we see CME consistently trading and closing at a discount below spot price action, I wouldn't necessarily be looking for that number right off the bat. And there's still, Bitcoin's still above support right now. But the direction is downside angled, and we have determined that on a break. Now, the 5-day, again, we're coming in at the 20 simple with the 20 simple here at, just below $20,000, which would constitute a gap fill between those two areas around that 19,995, 20,004 to 500 area. So $20,000 to 20,004, 500 going to be that gap fill target. You see the 5-day does not really have much in terms of Bollinger Band or, the measurement of volatility and returns over time. That lower first standard deviation coming all the way down there, at 16,800, which is basically just right back to the lows. Now, if you were to ask my opinion, what is the most likely thing to happen? Probably going to see some bounces from the daily here soon. Now, when will that be? We don't know. We could get strong trending moves on the daily that go on for a very long time, as we saw to the upside And we can see that now we're back below the 200 EMA on the 5-day for CME. And, we're still above some pretty major supports here, and they're all coming in right around that $20,500 area when looking left here. So, just to move this line over, just to illustrate the point, I mean, we've got all kinds of support in this area, right? So this is the big area. If that area breaks down, then we're looking much lower. Now, from the 5-day perspective, now it's going to be on spot price, it's going to be a few days before that closes. And, we're looking at a little bit of a different setup from the 5-day, but, generalize those targets down to around below 21.1, 21.2, going to be a quick trip, back to the low side supports. So that would be taking out all of the high side supports on the way down, the low side supports, and particularly where the lows intersect with the highs, which the most, the most likely place for that to happen would be at about 18.5. So that's kind of where I stand on price action now. Above $22,000, we can reevaluate the possibility that bears get trapped and bulls start to take over price action and push it back to the upside. But as it stands right now, the targets are here and lower. And so about 20,500 off that area, 20,400. And to be more specific on the daily, 21,366, then we would start to look down to those mid $20,000 targets. So back above 22K is what I'm going to be watching for to see what price would like to do. Where are we going to auction to? And I'd be very, very careful if things do pop back up very quickly, as I illustrated on the 4-hour chart here, because it's going to take a little bit of time for things to settle down. If things did pop back up above that 22,000, that second standard deviation, 22,654. Now, when I say a daily closure of 22,000, we can reevaluate, maybe start looking further up to 22.3. That does not mean that area cannot get run in lower term timeframes. That means is the daily closing above that $22,000 to 22.3 area would give me the bias that we test up further, most likely intraday. If we test up further intraday right away, from here, from the position that price currently is, I would not be looking for continuation further up before a move back down to try and set some sort of a higher low or structure change. Right now, we don't have any kind of structure change until getting above about 22,600, 22,700 area. So that would be your 4-hour structure change at least. And, you need to see it start on those lower term timeframes before we can even begin to think about further upside targets on Bitcoin right now. So if you're short, you're in a good position right now. You might not be getting, you might be paying a little bit more depending on the exchange, because I have watched funding dip negative pretty aggressively on some exchanges. So, but as it stands right now, I mean, probably in for a lower term time frame bounce here pretty shortly, or a little bit of continuation down, price settles down and then tries to bounce. I mean, the 15 minutes saying, it wants to try to bounce from here, but whether it can actually sustain that, who knows? It's got to get above 21.8 in these lower term timeframes for things to get interesting, to go and test around that 22, and then you just kind of take it in order. You can see here that above 22,200 here, that's the third standard deviation to the upside. So in and around where that 22.5 area is generalized across these lower term and midterm timeframes is going to be a big area of resistance to the upside. Obviously, it needs to get above $22,000 first, as we were hopping on that support there for quite a long time before it was lost. All right, that's going to do it for me and this analysis today. We'll come back to this tomorrow and see where things kind of land. You have a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe and stay safe. If you can do me a favor, if you liked what you were hearing here, if you like the analysis, if you want to help out the channel, please like and subscribe and share this video with people that you think might like it. And with all of that being said, I'll talk to you next time, and Landy out.